Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be joining you on Monday nights to talk markets and wrap up the week that was. Of course, look ahead to the week that will be and take your requests as well. Now, before we do that, we need to talk about the disclaimer, which says that the content of this presentation is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading and investing is risky. You could lose money. You probably will at some stage. We need to be able to put ourselves in a position where we have the discipline and consistency to deal with that effectively. But ultimately, it is you and not I who's responsible for everything you do. I'm struggling to speak tonight, but I'm sure I'll warm up once we start getting your requests. Ticker, please. All caps, preferable, so capital I's don't look like lowercase L's. What type of setup is it? Is it a continuation setup, turnaround setup, aggressive setup? We go long or short, plus R, equals R, minus R. What levels are you watching? The more you tell me, I think the more it shows that you're really adopting the model well. Let us head over to the AMI broker screen, and we can start off with our portfolio management model on the Nasdaq Composite, which is a little bit confounding for me because we were heading into that long-term trend ribbon with a little bit of momentum. Not that it was one-way traffic, because you can see even, from that was quite definitive, I felt, big streak into the short-term trend ribbon, which we expect more often than not all the time, but more often than not to offer dynamic demand, excess demand. And it did, and then we saw this one, and that got us a bit more nervous. And, was it this day? I can't remember, but we said, okay, stop adding new risk. I think we were at that setting last Monday, to be honest. We talked about we had some great setups, but we were already at not wanting to add new risk. So I think it might have been on that candle there, and then we had Monday, Tuesday, Wednesday, Thursday, Friday, if I'm not mistaken. So not adding new risk on that candle and letting stuff roll off by natural attrition, quote unquote, from that candle. So I think towards 50% cash, 50% invested. I think that's pretty decent compared to the confusion in the world and the fact that at that stage we're only 3 candles off what was nearly a peak. So I'm going to say a win for the system through here. Downward pointing shadow, fighting retreat, trying to hold obvious points of demand. And then you get Thursday, which is the opposite. It's the upward pointing shadow, low close, beneath the demand zone. And of course, the only thing in the way is the long-term uptrend ribbon. I shouldn't say that. We also got 21.98, 28.98. But it just felt for me like, geez, this is starting to get quite nasty. And then we get Friday. Friday's a complete, utter, total turnaround. And there weren't that many catalysts. You go have a look around. I mean, Amazon was down about 6 or 7% off lows, but still down a lot. Microsoft barely rallied, as did Tesla and a few of the other Mag 7s. NVIDIA led, AMD led. Some of these big AI hardware names were, I think, the rescue there in the tech space. And then we've still got this other situation here where we head over the Dow Jones Industrial Average, and there you go, 50,000. That was the headline. And I guess it begs the question as to why are we basing our portfolio management model on this? Because we'd be fully invested, like you'd be totally invested here. And I don't know if you're trading in the US, or certainly if you're trading here in Australia, because we're largely the reflection of what's going on there. I mean, is 100% invested, no cash, warranted? And I put to you, it's probably not. So there's a bit of a disconnect going on where you've got the 30 biggest stocks for all intents and purposes in the world. I mean, they are the biggest of bluest of blue chip. Many of them quite old school, not necessarily new technology. They're the ones that are going up, more than compensating for the newer economy ones that aren't. So it's not reflective, I think, of the broader market, probably not reflective, I'm guessing, of your experiences in the US, which are probably more along the lines of the comp, okay? Maybe the rut, the Russell 2000, and that still looks pretty good. So this, I guess, is the conundrum we have. And now, obviously, Friday, it's held the short-term trend ribbon, looks amazing. You know, if you tune out that Thursday, you go, hey, there's nothing to worry about. But don't tune out the Thursday, because on Thursday, it was, even that was concerning. I know it's only a short-term downtrend, but we are lower peaks and lower troughs, and that is quite a definitive move. So what's my point, Carl? Please get to the point. My point is there's quite a bit of volatility around, quite a lot of uncertainty, not a lot of consensus. You know, there are funds clearly who think the market is high or were foreseeing some sort of calamity there, whether it was credit related, possibly with those software stocks, whether it was, you know, something's happened with maybe a commodity fund, with the gold and silver route, or crypto. There's some, you know, it felt like there was something in the background that we didn't know about yet, some forced selling that was, you know, just spiking risk aversion. And then whatever that was, maybe, and again, we'll never know, and this is pure guesswork, maybe it didn't happen. You know, maybe it was a false alarm, short covering, catching up to the index. I don't know. But those two candles, it just doesn't seem right to me. There's something not quite right about it, but that's okay. Look, you know, it can happen. We can go from looking absolutely bloody awful to all of a sudden, this is the nature of US stock markets, and then we get dragged along kicking and screaming. And maybe I shouldn't overthink it more. Then guess what, Carl? The long-term trend ribbon just did its job over here. Okay, as it is want to do more often than not. Maybe I'm overanalyzing it. 50-50 is where I still am. Let's see how it goes at the short-term downtrend ribbon. Now it is a downtrend ribbon. We are lower peaks and lower troughs. These are hallmarks of sell the rally. That's why we're lower peaks. Of when we hit the previous lows, we don't bounce from those lows. There's not enough demand looking to buy the dip. In fact, that demand gets consumed, and it's trying, but it's losing the battle. If anything, we hit stops, and then we get a bit of panic out at the lows. We want to see buying the dips. No panics at the high. Forget the lows. No panicking at the highs. We're not selling at the highs. We think we're going through the highs. Get that, and I'm happy to add some more risk here. Call me conservative. Call me a nervous Nelly. I don't mind. Slings and arrows. That's where I'm at. But of course, you can be wherever you want to be at this point in time. Happy to miss a little bit. You know, 50% cash is a massively conservative position. That's obviously where we are here as well. And I get quite nervous. It's probably why I've spent so long talking about this already. I get really nervous when I've got that high cash levels, particularly when there's a long-term uptrend. So, people think, oh, Carl, aren't you nervous that the market's going to crash? I'm not worried about that. I'm nervous that it's a bull market, right? I'm nervous I'm in 50% cash and the market will go up. That scares the pants off me. I'm not nervous about the fall because I'm already 50% cash. And that is 50% ahead of your typical, about 50% of the typical balanced fund, but certainly 50% ahead of any passive fund that is just an index fund, right? So that's why I don't fear the fall. I'm already conservative. You'll look today, I mean, geez, almost equal and opposite candles, which is nothing in particular unless they're that big. look at the optimized true range here, these massive spikes. So yeah, unusual to say the least, and we'll play it by ear and wait for a bit more confirmation. And I'd be very happy to look back in a few weeks. I put a poll up, didn't I, in the evening wrap. Will we look back in a few weeks and see this as the definitive move that sparked or was the catalyst for moving to new highs? Because if you get a reverse like that, it usually is. No volume, average volume. 50% risk. Let's do a quick whip around the grounds. Obviously, we've talked about the Russell 2000, which has held its short-term uptrend very well, and that's encouraging. I mean, that's a good sign. The Nasdaq, Russell are the two risk-on markets. What's the difference between the two? It's just the technology factor. That's it. I mean, the composite is far more technology focused, and the Russell 2000 is more regular US businesses. So what we're seeing here is the underperformance of technology, and that is the AI impact. And then inside that narrative, there you've got, I'll get to it later. I'll show you later the charts of, say, AMD last night and NVIDIA. You've got the hardware angle, which is selling shovels to the miners, I guess, in the mining boom. And then you've got the software side of things. S&P 500, I know we don't look at it often. It's somewhere sort of in between, but at least that's also confirming this idea that maybe we need to be a bit more conservative, because if we look at the Dow Jones, you wouldn't be at all. But they're trying to do different things. This is a bit of a conundrum as well. You know, mid-caps, but again, there's less of a technology flavour in here. Kind of have to understand what's going on within indices. This is so fascinating. I know you're all fast asleep. Why does Carl keep talking about this? Because this is fascinating stuff for me. The French market, what's happening in the US right now is not it's not normal. It's probably not the right word, but it's unusual. It's unusual. French market looks okay. Looks pretty good actually. Not so much there in Germany. Euro Stocks is very, very strong, and the FTSE is invincible. That is blowing my mind how strong that market is, particularly seeing as we are getting tagged by a few things from time to time. Spain also very, very strong. Heading to Asia, not bad. We're looking for red flags. Are we seeing them? No. Nikkei, wow, that's a big move there. A few things going on with Japanese interest rates. We've talked many times in this session. It's such an underrated theme. It doesn't get any press in the financial news. But how Japanese JGB yields are rising, Japanese government bond yields are rising, and we're seeing this big repatriation of funds back into yen particularly. And that's part of what we're seeing there. And it will create some tailwinds probably for the ASX 200 as well. And some of our high-yielding sectors like banks, our big banks. Possibly why CBA has actually come off, if anything. No red flags in India. That looks okay, actually. Pretty happy with that in China. And that one's not a red flag either. Heading over to local indices, not far from ideal. That's quite concerning on the consumer discretionary sector. Energy looks okay. Financials, the big swing factor, a little bit of a kiss and go. Wasn't a little kiss and go here on the long-term trend ribbon. That's looking interesting for me because ANZ, Westpac, NAB, I'm pretty sure all three of the four have come up in my long-term uptrend list. That's interesting. And if that gets going, then if it's a moot point, forget black candles, white candles, the ASX 200 is going to make new highs. It is as simple as that because resources are okay. And obviously gold's bouncing, and we'll talk about the gold chart in a second. Healthcare looks pretty terrible. It's not coming from there. And the rest of this stuff, and there's a bounce today. I know there's a bounce today, but let's face it, it's hardly inspiring just yet. Materials, resources like gold, I think okay. REITs, I don't know, but that was one of the big black whites today, wasn't it? Maybe that's where the news is. But see, bond proxies didn't make sense when you look at the bond market. Didn't make sense when it looked at the bond market. So that's even more of a conundrum. Staples neither here nor there. Telecommunications I still think is very much downtrend. Utilities is a waste of time. So there's like 4 stocks anyway. All lords. Let's have a quick look at the base metals, and I will catch up some time here. Let's go. Line chart. Looking for red flags. No red flag, but some of the froth certainly has come out of these markets for sure. Copper still very strong. That looks intact. Iron ore has broken down, unfortunately. Nickel, it's pulled back, hasn't been able to hold those highs. Lead, same sort of thing here. Tin, same thing actually. That's a big pullback there. And zinc, I would say, just holding for now. Lithium, carbonate, back to the candles. I think we've got some problems. I mean, we've said that before, and there's nothing here to suggest to me that we are going to head back up to those highs anytime soon. It looks like a pretty decent, I wouldn't say cycle high, but we've got a long-term peak in place because we've got a medium-term uptrend, high peaks and high troughs in this side, and we officially have lower peaks and lower troughs in this side. So this becomes an MPOS, MPOS. What would make it more of a cycle high? Well, let's say you start to get a rally, and there's every chance we get a little bit of a rally up this side, and then you start to do something like this. You make another MPOS. And then the probability that this becomes a cycle high is substantially higher. And if you were to break that neckline, then officially that becomes a cycle high. Okay. So we're not there yet, but none of these candles are all that inspiring. We're heading into Chinese New Year now anyway, so it's going to get very, very quiet, and then to the point where it won't trade for a week and a bit. Looking at, let's look at some of these other spot markets as well. We've got for example, Australian spot spodumene actually is still okay compared to, say, the lithium carbonate contract. So maybe there's a bit of hope there. The one that really interests me at the moment is this one. I mentioned to you last week how good it looks, and that only had the tiniest pullback as gold and silver evaporated. It made a new high, and that's sort of like a 3-ish year high now. In fact, it is. And I've had an article. It's about 3/4 written on this exact thing, and I started writing it around about here, and it just keeps going up. So my headline is either getting better or a little bit outdated. Hopefully I'll get that out tomorrow. Asking the question why, stocks like Linus and Meteoritic, Arafura, they're really not moving. Yet this is a proper trend now. This could be a big one coming up here for NDPR or PRND, depending on which way you want to put it. Let's head over to the trading view screen, and we'll have a look at silver, which a bit like lithium is just looking a bit cycle topish, or at least major point of supply in place. The market psychology has changed. We've gone from anything is possible to we know what's possible now. We've gone from this is going to be the big one, this is the biggest bull market in 40 years, to that's the biggest fall in 40 years. And it looks just like the last one and the one before that. But gold actually still looks pretty decent, doesn't it? I'm surprised. I'm borderline shocked, actually, that this one has held up really well. So there's quite probably some legs here. And could that repair silver? I don't know. I'm not sure about that one, but gold still looks okay. Let's go as far as okay for now, but you know how I feel about those sorts of candles. Having a look at copper, a little bit more sideways and less of that huge species-ending event. I know it had nothing to do with anything. It just flips short-term trend. Very frustrating. Uranium, I think, was a bit of a speculative bubble in line with some of those other things. We've seen it pull back, but to a point that if it can recover from here is a pretty decent zone of demand, I think. So I wouldn't write that off just yet. I haven't looked at some of these for a while. A bit speculative, bubblish, as they were all going at the same time. That's thermal coal starting to move, and we know coke and coal already had, but a little bit of the edge taken off that. I talked about the yen, so we can actually see that's actually quite surprising, isn't it? It's the Australian dollar appreciating against the Japanese yen, which is at odds with what I said before. But I wonder. Honestly, I haven't looked at this for a while, and then we're seeing actually. There you go. It's not the transmission isn't necessarily through here, but the Nikkei is going up, but it could well be for some other reason. We didn't do bonds last week, so we'll quickly do bonds, and let's head back to our candles, and we'll kick off with the Aussie short-term bonds, and what we're looking here is just pain, isn't it? Pain. For anything interest rate sensitive, it is the reason why real estate stocks have had such a tough time. And today's rally, I think, is inconsistent with what we're seeing here. So food for thought. It's also hurting the other high PE sectors like consumer discretionary. It started off with a PE in the 30s before this move. Technology started off with a PE in the 90s. Get that in the 90s, and people were justifying that by growth or whatever you want to call it, Pro Medicus and all that sort of stuff. But at the end of the day, there's a lot of room for error there. You could come down to the 50s and people will still say you're crazy expensive, right? So, and it probably is somewhere around there right now. If it gets down to the 20s or 30s, I'm going to start calling it cheap. Let's head over to the US ones, and I'll show you the Japanese ones because that's that uptrend there, and that's looking like the Nikkei, obviously. And then the US 2s coming down. This is more about Fed policy and looser Fed policy, but then we go to there, and that's far more steady. So we short-term lower rates, but longer-term probably not. And I think, look, partially also what we're seeing here is the impact of the de-dollarization trends as well. So these are your long-term risk frees. So these are the ones that your big governments and central banks will be holding to balance, not balance, but to bolster their own balance sheets. And possibly the higher yields here versus the twos are showing you where Fed policy is going, and then where some of that de-dollarization is occurring as well. But I'm getting a bit technical, so let's head back here, and that's our whip around the grounds, and get over to your requests, which will kick off with Alan, who's got a couple there. EML is the first one. And if there's any other of those big picture charts you want me to look at or comment on, let me know. And always happy to, but I want to keep this moving as well. I'm trying to figure out where I'm going next. I'm going here, back to auto. That's not it. That's it there. So Alan's saying he's already taken out a short on EML. That doesn't surprise me because it's certainly looking like it warrants a short. I think I put it in on this candle here. Correct me if I'm wrong, but that's just where the setup is. So we can see the little, talk about that, so that kiss and go on the long-term trend ribbon before, and this is one that's on the short-term trend ribbon. And the short-term trend ribbon is obviously in place, so we're just ticking some boxes here. Long-term trend ribbon in place, little talking about kisses and goes. We've moved back up there. We've had all that hope that it was cheap. I mean, EML's getting cheap, EML's getting cheap, EML's getting cheap, EML's getting cheap. See, I told you so. I told you it's cheap. Ha ha ha. I bought the bottom. And guess what's up here? Like just a wall of supply. Longer term holders that don't like the value story here anymore. Not only do they not think it's worth 95 cents, they probably don't think it's worth 65 cents or 55 cents. We're about to find out. So that buy the dip, that hopeful pick the bottom demand was consumed, and what we had left was excess supply, and rallies are sold into. And instead of holding up at troughs, we cut through them. And then you get some sort of catalyst like the acceleration in the tech rec, and it makes it easier to cut through even larger previous zones of demand. Where's the demand gone? All of those traders who thought it was cheap, they're just not there anymore. They've got stock. Now, the problem for them is they were making a bit of money, but they're not going to sell for 90 cents. They weren't buying at 80 to sell at 90. They wanted $1, $2, whatever it is. But now they're in a losing position. So the problem with this is that if we, and you saw it today, and the tech sector rallied 3.5% today, and you look at this one, and all it could do was just move back into the old demand zone. So this was the old demand zone equals cheap, bargain, buy the dip. They've been consumed, right? Which equals now they're part of supply. And that's the big problem for the market. And this is their break-even point, right? So they're not happy right now. And they're going to be just sitting on the button. And it might go to 82 on a day by the time they get their grubby little hands on it and push it down to close it at 80 or 78. And that's the problem here. Hey, all I've given you is a plausible narrative, haven't I, as to what's happening here. It's plausible, but it's just a story. We'll see what happens. We'll know if the supply's there because we'll get black candles. We'll get upward pointing shadows. We might even see a big upward pointing shadow on a high volume day to say that supply came in and whacked the market might have been up that day. So demand comes in, or better buy the dip, and then wacko. If we see that, I think we can not only maintain our existing positions, and that's really where we need to get to at the end. We've done our analysis. We've understood and accepted the nature of what is more often than not going to be the case here. And equals R in terms of we're maintaining our short side risk. This is an equals R, as in, I'm happy to keep what I've got on this. That's silly because I wouldn't have any, you know that. And I don't need to explain things on Monday night like I've got to explain it in delicate detail on Wednesdays. We know equals R here is maintaining short, but I don't even mind today. Today was a dead cat bounce if I've ever seen one. I'd happily go plus R. And this is, of course, adding risk to the short side. So happy with that one, Alan. And, we'll just see how it develops. Play it by ear. Other shorts that were out there today, if you're looking for short exposure, ACL. EML didn't come up because, it wasn't wasn't that it wasn't a bad chart for sure. Just these ones are better, and you'll see they're better. They're closing on the low, big black candles, volume. So yeah, it's less about EML and more about what these are. This one I just put in on pedigree because, I mean, again, look at today. Just couldn't even rally. That's bloody pathetic. And I think you just want to have a little bit there for when the earnings come out. That one, another dead cat bounce. GNC, a bit like, maybe I should have put EML in. Now I'm thinking HMC, far clearer there. Look at the volume of the volatility. Lend-Lease, that's pretty obvious. Very strong signal there. Nanosonics also. Another strong signal. Again, didn't bounce, but closed far lower relative to its previous candle than EML. And that one's very obvious also. Didn't have many longs. SKY, TKM, and TVN. And even then I was contemplating there's that little upper shadow, but I just felt it's so bloody strong. It deserves to go in as a plus R today. So what have we done? We've done EML for Alan. We've done both lists for tomorrow. Let us move to Alan's second request, which is, I'm trying to find it, S32. There it is. So obviously, you tell me if Alan's long or short. This one, obviously, he's not short. Although it doesn't mean we can't short it if we get an aggressive setup. I just don't think we're there yet. So then we've still got the short-term uptrend ribbon to contend with. And it was looking immaculate on the on this day here, and that was actually post the weekend wipeout, wasn't it, on silver and gold? So that did really well. A little bit ho-hum since, but holding, and I think we've got some really clear levels here. I don't think we need to do anything just yet, but we are, alert, not alarmed, and I think we've got a couple of great levels here as well that we can sort of reduce risk around. Okay, so let's say close beneath here, close below equals minus R, certainly here, close below minus R, and yeah, really close. Get a couple of units of risk off the table very quickly there, and then we could probably, assuming you haven't had the almighty species ending candle before it, you could go here as well, close below, and that would be your final. I can't see any reason to be have any risk on it beneath there, ZRP. But in the meantime, you tell me what's so sinister about this that we need to be reducing risk right now. We've still got high troughs in place. We're still high peaks. Encouraging candles here. It just got a bit overwhelmed by how crappy the rest of the market was. Having said that, it could have bounced a bit better today as well, couldn't it have? But let's go equals R on that one. We're obviously not plus R. Okay, let's head over to your requests. Let's go to Francine. Hello, Francine, who's got Mineral Resources, which is looking a little bit forlorn at this point in time. Now, I did comment on this on Wednesday last week in the Chart Watch Live, and I did say that one, and that one is a big no-no when you blend them together. It's very close to species ending. I mean, if it just rallied a little bit, perhaps, to save it. But it's a nasty, nasty reversal. I mean, from top to bottom, and you've heard me talk about this rule of 10% move is usually a pretty good sign. The party's, if not over, then it's coming to an end. Somebody said the keg is running dry. So what is that high there? That was 66, call it, around it, and then we've come down to as low as 55, or let's call it 56, as 66 to 56. That's closer to what, 13-14%, isn't it? And when you blend those candles, pretty nasty. First candle isn't enough, but that second candle is certainly convincing. So for me, I cannot be sitting there on that second candle. We're also close beneath the short-term trend ribbon on that candle. I cannot be sitting there looking at that candle and saying FRP. So let's say FRP equals technical term. No way. Okay. So that requires a reduction of risk. Now, the next bit is here, where we hit the short-term trend ribbon, which we know on the way up was so freaking perfectly acting as a zone of dynamic demand. And when you see it do the opposite, act as a zone of dynamic supply, it is confirmed on that candle, then this for me is ZRP. Technical term is yes, please. Okay, so I cannot, in good conscience, still have any risk on mineral resources after that candle, but certainly would have been reducing risk prior to that also. And that brings us to today's candle, and I don't think there's anything more to say. Equals R. Well, is it a short trade? Is this an aggressive short? Maybe we could start to bring that discussion in a little bit more. I don't think it is, because this candle isn't enough. That last candle's not enough to do anything at all. It's quite an indecisive candle, certainly not demonstrative of supply side control. So it's nothing. So we would still need a supply side candle. It would need to look something along the lines of this, and assuming, fairly small one, which let's hope it's as small as possible, because of the next thing I'm going to say. If we were getting in as for a short trade around this level, so we're going minus R short, we need to be able to make 1-to-1 at the long-term trend ribbon. Okay, so well, it depends on how close you would have your plus R, because if it did that, and then it would, we are so far guessing into the future here. Like if it was even like that, and we did this, right? You could, in theory, run with this, right? Because that would form that as a point of supply, a peak. And then we need to measure, and I don't think we are. I still don't think we're getting 1-to-1 either way. But it would depend on maybe if you squinted, it would. You can see how many variables there are in making that happen. I mean, I need to stop wasting time on this, but I'm getting a bit obsessive compulsive about it. You know what I mean? Do you know where I'm coming from? If you don't know where I'm coming from, do a thumbs down. But it all depends on where you're placing your plus R. And, if it gets there, we've got to start to do that work. So we're working out an aggressive setup. And the reason why we must make 1-to-1 into the long-term trend ribbon is for the reason we saw at the very start, is that long-term trend ribbon can be a bloody doozy. When we get down there, we can do this. And we need to have at least 1-to-1 in it, or why the hell are we taking a trade? So what we're talking about here is mineral resources for an aggressive setup, but explaining in greater deal what that aggressive short setup is. And if you're long South 32, it makes a lot of sense to target something like MinRes, because if you're long South 32, there's almost no point shorting EML to get any short cover, to get any hedging benefit, because it's moving on a completely different theme. If anything, South 32 is going up for the same reason EML's going down, the rotation from technology into cyclicals and low PE. So if you think you're very clever by going long South, and I'm not saying anything bad about you, Alan, I'm just using you as a case study, but we will do this as traders. We'll think we're being responsible, we'll grab a bunch of long side exposure on everything that's trending up, and then assume because we've got a few shorts that we're protected. Well, you're probably not, because whatever's driving those longs up is probably driving the shorts down. So when we can find two resources stocks that have up until a point moved on the same theme, when we are long one and we are short the other, now we are getting some actual hedging in place, because it is quite conceivable that if the resources sector were to roll over, South 32 and MinRes will fall. Okay. It is also conceivable that South 32 goes up and MinRes actually starts to recover. We'll deal with that. It was a hedge. We'll cut that quickly and let the other one run. Hopefully we'll come out ahead. I mean, that's what we're trying to do, better than a zero-sum game. But it is also possible that for whatever reason, I mean, this is why it broke. South 32 doesn't have those huge black candles. There's a reason this one is underperforming. It's also possible, that third scenario, that South 32 actually stays in trend and this comes off. Interesting stuff. Hopefully we get a few more case studies like that. Thank you to Francine. Hopefully that's what you wanted to hear, Francine, but I fear it's not. Hayden saying, thank you for continuing these into 2026, Hayden. I'll keep going until I don't have anything. I feel that I don't have anything interesting to add, or you stop turning up. So let's make that deal. And I guess if I don't have anything interesting to add, you'll stop turning up. So we'll both know until that day. And yeah. Adonis, hi Carl, hope you're well. I'm well, thanks Adonis. Thoughts on the following USA stocks? Okay, well, as usual, we'll do Adonis as USA stocks at the end. And Brett saying a dead cat bounce for, I'm not sure which one, but maybe for technology. And Jackie saying, or maybe even for Mindres, Jackie saying, hi Carl, what do you think of AS1 equals R or plus R? Okay, let's go AS1. That's definitely right. AS1. There we go, Asara Resources. I think it looks very good. I didn't put it in tonight's list because of this upward pointing shadow, and that was me being really, really nasty. I'm just trying to check if I put it in the broader list. Take 1 second. I didn't, did I? So the broader list you've got access to. I'll show you this. So this is the broader list, and I showed you the feature list before. So the broader list. Why didn't I put in AS1? And make no mistake, I looked at it, and I spent. Normally, I would spend 3 seconds on a chart. That would be a long time. I probably spent about 13 seconds on AS1 deliberating whether I put it in this list, and it didn't. Just missed out. And now that you've asked about it, I'm regretting, and I probably should have put it in. Well, let's see. Can we see that it is definitively not as good as some of these other ones? A1G, very solid. Pedigree, holding short-term uptrend ribbon. A bit of an upper shadow though, but I think quite small. That one, no upper shadow. That one certainly deserves to be in there. That one, very little, hardly any upper shadow, deserves to be in there. Amcor, no upper shadow at all. I wanted this in because I want a different type of setup here. This is a turnaround setup. ANZ closed, I think, quite close to the high, but also me sort of just hedging a little bit on because I've got such low portfolio risk. So some of these ideas that I have in these don't come through. You might go, oh, look, I can see why Carl put that in, but it's not that strong compared to some of the other ones. The price action's quite compressed. There's a major point of supply there. I can see he's got in ANZ today. I can see he's put in NAB. I can see he's put in MVB. I can see he's put in Westpac. I can see he's put in Wesfarmers. Why is he doing these things? None of those are shooting the lights out. Let's face it. Can anybody type it in? Why do you think I'm, what's the right word, promoting those higher up the list than they might otherwise usually go? And again, just taking nibbles on those 1/3 up positions. Why? Think about it. I will give you the answer at some stage. De-risking. Interesting way to put it, Peter. But de-risking what? De-risking what? What did I say that keeps me awake at night? Other people go, oh, Carl, aren't you worried about the market's going to crash? I'm not worried about the market crashing, right? I showed you that kiss and go on the banking sector. I'm underweight index. I don't want to underperform the ASX 200 because that's going to make me look like, quote unquote, a dickhead. To be honest, ladies and gentlemen, I'm supposed to be a good trader. Think about that for a second. Where were we? AEL, Amcor. We got to, in fact, we were at ANZ, AON. That's obvious. Closing at the high. CXL. Anyway, I'll let you get through the rest of the list. EVN closing at the high. Diversification. Not all resources, for example. You're close, but you're all sort of circling around it. Let's head back to here, where I'm trying to convince you why I didn't put this in the broader list, and now I'm thinking I probably should have. Can I find another reason why I didn't put it in? Volume wasn't that special, perhaps. Look, let's call a spade and say, look, this is very strong. I can't find any reason not to go plus R. I probably should have put it in equals R at worst. It's very, very strong. I can't fault it. That it's a little bit scrunchy, isn't it? And it's a little bit overlappy. It's not the most liquid stock, and that's why we're getting that. But otherwise, it's not such a bad thing if everybody agrees it's good. And I think that's what we're seeing here. AS1, Asara Resources. For you, Jackie, pretty happy with that one. Robert saying he wouldn't miss it. Good, glad. Hi, Carl. ACE and FDR. Let's have a look at those ones for George. ACE. yeah, I can see what you're going for. It's probably a little bit too early for me. But if you had a nibble, and that's your worst case scenario, just have a nibble, see what happens. If it was looking, I don't know, like that, I would say don't have a nibble. Like there's no need to. But I can see a reason to do it. For me, no. Personally, no. I think I just showed you 20 other stocks that I'd rather nibble on than this one. But if there's something about it that you like, or the story or whatever, nibble away, no complaints. There's lots of good stuff going on here. So I like this. A little bit of interest here, a little bit of excitement again. Candles are good. You can't beat these last two candles. They're fantastic. They're coming in at a good place. But there's the buts. Okay, we've got a bit of supply here that we still need to deal with. Thank you, everybody. I can always count on my thumbs downs in the corner of my eye. Oh, I hate it when I do that because then I've got to go over it again and it wastes time on the recording. Acusensus for George. I think it looks very good. Have a nibble. Like I was saying before, if it looked like that, I wouldn't say have a nibble. I'd say there's no reason to have a nibble, but it doesn't look like that. It looks like that. As I said, bit of volume coming in. There's some interest. Extra volatility. Something's going on. It's got my attention. Two perfect candles. Off a great place, long-term uptrend ribbon, and then the butts. Okay. Look, it's held this as well. It's held that. Has not closed beneath that point of demand. All good stuff. Happy with all of these things. Point of supply. That's all. A little bit of concern there. Is it a particularly ominous one? Was there a lot of trading there? Were there a lot of traders that got stuck in this one and therefore may wish to use it as a place to get out and undo their mistake? You tell me. Use your eyes. Use your logic, your powers of logic. Certainly there was some motivation on that day. They were motivated, but there weren't that many of them. So probably not going to be a really large impediment. But then when you start to add up all of these, they kind of add up to be something that could be a bit larger, right? So this in itself, probably not so ominous, but then there's this, and there's this, and you're adding up, actually there could be a few traders waiting there to get out. And then we know there's going to be some more there. And they were pretty consistent here. A lot of black candles, a lot of distribution, a lot of them sell the rally, and then we've got 4 good ones. So give it a score out of 10. I said, if you're interested, take a nibble. I'm not going to write plus R on there because personally I wouldn't, and I don't want to come back in 10 weeks and see it down here and say I wrote plus R there. Where would I plus R? Well, let me see how it goes here. Give me a dink, give me a decent candle, and then I'd happily move to a plus R. That's what it requires from me. If you wanted to do it, you're going to eyes wide open. Okay. Let's go to, and what I'm trying to do here is get you to the point where you can make a confident decision based upon the merits of any particular chart, right? If you're going to take a nibble here, and let's say plus R is your typical addition of risk, whether that's 1%, 2%, 3%, 5%, hopefully not higher than that, of your portfolio, of your capital, your cash plus your running P&L, okay? You don't have to do that whole R. Is it a third? I like to enter in thirds, but I like to end it quite quickly. Build it up over limit, plus 4R. Take a nibble. Is it a fifth or is it a sixth? Whatever, is just getting some money on just to scratch that itch so that if it goes up, you're not annoyed. The problem is if you don't scratch the itch, because you know the story, so it's not a problem for me. You'll be going, at $2, you go, I knew I should have bought Acusensus. No, they just came out with that news. I was waiting for that news, blah, blah, blah. Why didn't I buy it down there at 160? I can't buy it now. I can't buy it now. Like I should. I'm embarrassed. I should have bought it at 160. I'm not going to pay $2. Look, I'll just wait for it to come back. Maybe 190, maybe 180. I might be able to get it if it comes back 210, 220, 230. Oh, why didn't I buy it? Why don't I just buy it at $2? What the frick is wrong with me? That's one path. Remember that movie Sliding Doors? The girl, she goes to the train or whatever it was, she misses the train. If you just put some money on it at 170, it gets to $2, you go, bloody hell, that's pretty good. Well, I wish I bought a few more. Why don't I buy a few more now? You know, my average is still going to be pretty good. Man, completely different way of looking at the market. And that's what we're trying to manage here. That's what we try and do in live market analysis and chart watch. There's the textbook print stuff, right, which I did for years and years and years and years and years. And then the stuff you only learn by trading and losing and doing stupid stuff over and over again. Not a few times. Okay, I was I was in my teens, ladies and gentlemen, right? Look at these grey hairs. I've got my dad. It was many years ago. We moved to Melbourne, and you know I was still living at home, and he had all these boxes of my contract notes, like you know those paper printer boxes, you know, like this big, and they were just full of contract. They were stacked in my wardrobe. And then I moved interstate, and he said, "What am I supposed to do?" It's like it's a fire hazard. Thousands, if not tens of thousands of trades done by me before I was probably 25, ladies and gentlemen. Everything you have done, I've done, square it. Okay, so there's a lot of just not managing, trying to manage the market and what the market's going to do. We work on that, but also just managing up here. So anyway, what about FDR? And hopefully some of this is working for you. Some of this psychology stuff, because it seems stupid. Like, Carl, if you think it's going up, mate, why don't you just buy it? Just buy the hell out of it. You do all this nibble stuff. You nibble here, you get out a bit there, mate. What the frick? Why don't you just make a call? There's some method to the madness there, because I'm not, like I could, if I was totally disciplined and had no emotions and I was a robot, and maybe that's what I need to do. Because if I was an algorithm, and if I get around to maybe programming or hiring somebody to do it for me, then maybe you could actually go in a bit harder, isn't it, when you think about it? But this is designed to manage me, ladies and gentlemen. The system you're trading is designed to manage me and my stupidity, which is substantial from time to time. Find energy. Is this a nibble? Like, let's compare and contrast. Like, I could not have asked for two better case studies where I said, I can look, I've gone all of these things, the weight of evidence, ladies and gentlemen. No, what, six out of, it's probably unfair, 6.5 out of 10. Is it 10 out of 10? No way. We gave you lots of reasons why it isn't. And then we go to this one. And we're going, well, I don't think it's 6.5 out of 10. And what worries me more, I think, if we go here, is this stuff. So that's pretty serious, isn't it? I think there's a bit up there. A few more black candles. I don't have those two perfect ones at the end. I do have a short-term uptrend, funnily enough, but it's just very flat, and that's why it's not hard to get one. But it's held the long term. Look, 6.5 out of 10. Oh, I'd be struggling to get to 6, but I'm more than 5. 5.5 out of 10. Maybe it's 6. I don't know. I don't think I want to nibble on this one, though. And I don't know what's going to happen next. This one could end up being better than last one. I just don't think I need to, given there's all that other stuff around. But ask the question. You know, let's debate the merits of this, and let's see what some of the little, if anything, vagaries of this model is that I've built over 30 years. I'm guessing you're on this. It wouldn't make sense to be anything but on this right now. And I'm guessing, Robert, you're wondering whether it's a minus R at this stage. Oh no, Robert's plus R. Thank you for actually letting me know that, Robert. No, I don't think it's plus R based upon the last two candles. I'm just concerned about this, and you would know what that upper shadow means, and that one means there. We've also got some serious expansion. Why can I not draw in the... for some reason it doesn't let me draw in these windows, which is bloody annoying. Let's go delete studies. Anyway, here. Okay, so when we've got... Well, that one's okay, actually. So I shouldn't refer to that one. That one's okay. We don't mind the volatility when it's closing on the high, but we don't want the volatility, massive volatility with an indecision candle. Now, it could be a lot worse. That's okay, but it also wasn't a lot better. We've got elevated volume, and we've got a price action signal that is far from ideal. Hey, if this was close with down here as a black body, I would say that's it. This one's done. Forget this one. So it's not that bad, but it's enough for me to require further evidence that clearly we've hit someone's level, like somebody who's been in it for a very long time, 25 it could be, 26 they got a bonus because of the euphoria on that day, but they've started to sell. If you were watching it intraday, you probably felt that. Somebody's sitting on this thing. Doesn't mean they know what the hell's going on. Doesn't mean they know where it's going to go. It just means that they've made enough money for them. Could it go higher? We don't know. Could do anything. I don't know the fundamentals, and I wouldn't want to know anyway. But if the fundamentals are good, you'll see the market soak that seller up. They'll soak it up. It won't pull back very far because there's just as much demand here. Soaking it up, soaking it up, soaking it up. That supply will dissipate. It will go. And if there's enough demand, we'll head off again. And we'll see some candles. I don't need to necessarily wait for a close above this level, although that would be good. But certainly, let me see a nice candle, high close. We didn't get it today. Today's candle wasn't bad. In fact, I think it's pretty darn good. But we didn't get the close that we want. And the close that we want looks like this. And that would tell me that this thing's got legs. And if you were to see it literally throw in that candle, that would be a feature chart every day of the week in ChartWatch if we got that candle. So let's say if equals plus R, but for now equals R every day of the week, where would it become a minus R? Well, certainly wouldn't want to see it trading beneath that shadow low. That's lights out. Let's go to getting close. Got about 8 minutes, so I want to pick up the pace. RVT. Yes, this is nibble-ish. Yeah, happy to nibble on this one. Eyes wide open. That is a cracker. That, followed by that, followed by that. Talk about hitting somebody's level and then them just letting go, right? How long have they been suffering in this stock, ladies and gentlemen? A bloody long time. So for them, that was Christmas, Easter Bunny, don't know, Hanukkah, whatever it is. It's all come at once, right? But this is interesting today. Definitely volatility. Not volume though, is it? Are you happy with the volume? I don't know. Would we nibble on this one? I wonder. Hey, it's a nibble. You don't have to do the whole amount. You could do less. I'm going to go plus R on the basis that it's a specky. I like the candle. Having a go. I know we've got problems up here, but let's see, if we get halfway there, I'm going to be break even in the worst case, I'm sure. And we're heading over to the US or indeed Canada now. Nobody actually gave me the reason why I'm just keeping a very close eye on those banks. The reason is, ladies and gentlemen, we head back to here. The banks are about 30% of this index, depending on the day of the week. So if they get going, 30% of this index is heading up, and I'm at 50% cash. So by having long positions in the banking sector, I'm not actually holding as much cash as you think. If my 50% invested has some banks in it, that's kind of turbocharging what I do have. Okay, that's the rationale. Let's go to the TradingView screen for all the right reasons this time. And we're going to type in Peter's CGNT, which is actually Canadian stock, which is going to be this one here, Copper Giant Resources. It's a pretty darn good name. And talking about nibbling on stuff, like you could almost now forget all the other nibbles because this nibble is better than all of them combined. Because we don't have anything in the way. And if we zoom out to the weekly chart, we'll see. I'm sure there'll be something. Well, there actually isn't until we get up to like $103. There's obviously been some sort of reconstruction here, some sort of corporate action, perhaps backdooring the current business into an old business. It's good to see that the TSX is much like the ASX in that way. But at $1, I don't think 103 is going to be a major issue. So effectively, we can treat this as blue sky. The price action is very decent. That candle's very decent, and volume tells us we've removed a bunch of deadwood supply. So as far as nibbling, forget the other ones. I'd much rather be nibbling here, plus R for me on this one. And it gets a score out of 10 as a turnaround setup, 10 out of 10. And it gets, well, let's call it 9.9, and it gets an extra 0.1 for its name, Copper Giant Resources. All right, let's head up to Adonis's. Looks like Perry's not here today, so we'll do Adonis's and we'll head off, which is fine by me, because I did say we want to try and finish at 8 o'clock from now on. So Adonis has got WMT, which is Walmart, which I'm guessing is doing very well, not just because we've looked at it previously and I know that, but I'm guessing the Dow 30 is absolutely blitzing, so something like a Walmart is probably doing well. And there you go. So Adonis, I think you asked about it last week and we said plus R, so I'm sure you're still on it and doing well. He's thumbs upping that. And I'm happy for you to ask the sorts of things, because even if it's just for confirmation, I mean, you know what you need to do is plus R or equals R. Both viable options depending on our portfolio risk, because you might be banging up against that 50%. I wonder, and if I knew how to use this package better, I would go and find the 30 bigger stocks and look through them. But why don't you do that as homework? Go and look at the Dow 30, because if it's breaking 50,000 and hitting all-time highs, you're probably better off buying Dow 30 stocks, ladies and gentlemen, than any Aussie stock. Like, you know, do I need to shake you by the shoulders and say, hey, there's a world out there to trade, and most of it's better than what's on the old tin pot? We call it the old tin pot every day. We joke about it, and yet you're all still here. 100% says Adonis, CSX. Going to the next one. Beautiful. Perfect. Let's go weekly chart. Even better. Nothing in the way there. The perfect chart. I can't fault this one. You know, is a little bit far from the like Redmond. I'm not fussed about that. It looks too good. Plus R or equals R for me. But, you know, if you can find one a little closer, that still looks very good. But we're splitting the finest of hairs. Let's click save. Let's go back to Walmart, because I did change. That's why we probably won't see all the scratchings from before, because I don't know if you noticed, but I changed the name of it. I changed a few things around, just the formatting, not anything else. They're not working. Here, this is one of the things I did. I know you can't see it because I'm in the way, but I figured out how to put the names of the indicators on there as well. So I must remember to do that. And that, I seem to have lost all my old scratchings in the process. Let's go to, not that it matters. I'm preaching to the converted. I don't need to prove to you lot that the model works. Let's go to, now you wanted this one as gold.commonic, is that it? And let's see if we can find it. Yeah, .com .com space Inc. So what do these guys do then, Adonis? Not that it matters, but what do they do? Okay. Yeah. So like shovels to the miners sort of stuff, isn't it? It's not, or is it like an ETF? Are they actually holding physical, or is it more just facilitating the trading? They hold physical as well. Okay, they're like a platform. All right. Yes, looks good. I just don't like the shadow here, but yeah, it looks fine, and it's just representative of what's happening on the gold chart, isn't it? The gold chart isn't a lock to go back up. There's, you know, I'd go gold sort of 60-40 to go back up right now, which means 40 is pretty decent to not go back up. And this is looking fine. Not my favourite one. Yeah, the last two I think are better, but you know, give me a nice candle closing at the high, and happy to ride this on the next leg. Yeah, equals R, certainly. I mean, if you happen to have it, I don't know if you have it, but, and you don't have to tell me, but yeah, equals R. But needing a next demand side candle is what we, next demand side candle equals plus R, and put that on, and we'll know for next time. Click save, and MRK, and then we'll look. I want to look at Amazon. I'm going to look at NVIDIA. So MRK. Merck Company, very good, can't fault it, happy to go plus R on that one. Let's go, and this will be one of the Dow 30 for sure, I'm thinking off the top of my head. And again, typifies what's happening at that big end of town, because where do you think the money from all of those technology stocks are going? Like, they still have to be invested, they can't go to cash, so it's just going into safer, more liquid stuff, ladies and gentlemen. That is just so obvious. And then AMZN. Now, this is fascinating because if we look at the Mag 7, they're having some problems. MSFT. All right, that was not a bounce. That is a dead cat bounce right there. And saved largely on the Nasdaq by NVIDIA, which was flirting with the long-term trend ribbon, but had a decent bounce, and AMD as well. But if we head again, just focusing on some of those Mag 7 stocks, looking at actually Google actually still looks pretty good, doesn't it? So that one's not so bad. Apple, of course, you look at Apple, bouncing strongly. Okay, so not too bad. So yeah, it's I guess more of that software sort of thing. And Amazon was earnings. Maybe we'll look at the Dow 30 next time. We might leave it there. Yes, I've done all yours, and there's nothing down the bottom. So let's adjourn there, ladies and gentlemen. I'll head back over to the... No worries, Adonis. Head back over here and go there. Oh! I'm not going to read the disclaimer again. I'm going to go here. Thanks for joining me, ladies and gentlemen. All the best until we catch up again. Just be a little bit circumspect, I think, in markets. Something's a little bit up. We may not find out what's up for a little while. We talked about that rotation into the Dow Jones, and some might look at that as this great green flag as to that markets are very healthy. But in many ways, that rally in itself is not necessarily occurring for all the right reasons. So fascinating times and a great time to become a better trader as well. Catch you next week. Bye-bye.